Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Wednesday, August the 27th. And I'm starting off with Circle Oil, where we've had the big jump yesterday, and the question now is really how to handle the price action after such a big unfilled gap to the upside. What is fortunate here is that we've had not only a gap through the 50-day and 200-day moving averages, but also the aftermath of quite a sharp bear trap below the former November support around the 17 pence level. The best way forward here is probably to use a 200-day moving average of 21.32 at the moment as an end-of-day close stop loss, as we await a move towards the top of a broadening March 2013 triangle as high as 29 or even 30 pence over the next few weeks. This gives you a pretty decent risk-reward ratio in terms of going long even after the jump, with any weakness towards the 200-day line in the first instance being a good excuse to get the stock as it cools off the overbought RSI position currently at 77 pence. Stop loss end of day close, as I said, back below the 200-day line. Next up is Mariana Resources, where it's been quite a struggle to get the stock to turn around. Looks like we finally got this happening here with the rebound off very oversold RSI levels towards the 20 number, and also the rebound off the floor of a December falling trend channel around the 1.8 pence level. This is now the stop loss on the buy argument as we look for a rebound back towards the top of the range at the top of the December channel, currently towards 3.76 pence, which is also the area of the 200-day moving average, and that would be the target maybe for the next 4 to 6 weeks. As you know, people who are not quite sure of the shares maybe would wait for an end-of-day close above the 20-day moving average of 2.45 pence just to establish or see whether momentum has been established successfully. Next up is Rose Petroleum, which has been a personal favorite of mine, as you can see probably why, over the recent past. A pretty decent progression here within a rising trend channel from May, a couple of rebounds during August to date, and with the 50-day moving average of 2.98 pence also helping out. Yesterday was particularly strong, rising candle there, nearly closed towards the high of the day after opening at the low. So that should be enough to take the shares back towards the 5 pence target at the top of the May channel. Probably the stop loss at this point, either an end of day close back below the 20-day moving average at 3.2 pence. But if you're maybe don't want to risk so much, you could use the initial August peak at 3.5 pence as the end of day close stop loss on the buy argument. Finally, we've got Roxi Petroleum, another favorite of mine, largely because it has behaved very similar chart to Rose Petroleum as well. We've been looking for 20 pence, as you can see from the previous annotation on the daily chart here. We've basically done that 3 times now, so it's a matter of seeing whether there's further momentum here. It does look like there may be, given that there's a rising July trend channel, support line there in the oscillator window towards the 70 level. That gives us scope for one final leg to the upside, and that would be towards the top of a June rising trend channel at 25 pence over the next couple of weeks. The stop loss is an end of day close back below the 10-day moving average at 17.25 pence. That's it from me. More updates at spreadbetmagazine.com.